Hello guys, welcome to this video, and in this video guys we are going to look into the Bitcoin and indices and gold and many other major asset classes like oil. Okay, so in this video guys, this is going to be one of the massive update video, and along with the update of the market conditions that we are right now in, I would be also sharing my perspective and my views and what are the actions that I'm taking right now at this moment. So first of all, what I'm gonna do is I'm gonna hide all the drawings that is came along, after this job. So I'm going to rechart this completely. And first of all, we have to go into the monthly chart and let's see what is actually the thing that what is the actual thing that is happening right now. So you guys can see the January candle. It's a surreal bullish candlestick pattern that we have got here. So unfortunately, we don't have any wicks on this candle on this monthly. So is was there was any other candlestick patterns like this before in the Bitcoin? Let me check that out. So here also you guys can see this candle with a Novik scenario and this candle too. So it is possible to be having a candle with Novik in the case of Bitcoin too. So there is nothing to be actually really worried about. So this candle too, that's a Novik candle scenario. So it is possible, and there is nothing usual with that. So this is completely a bullish engulfing pattern. So if this monthly candle could break this candle high, so this is a November 2022 high. So if we could take out this and pump a little bit more, then it could be a bullish engulfing in a bi-monthly chart. So that's a really bullish case scenario that we are getting there. So when it comes to in an overall structural case, we can see that there should be a little bit more, a little bit more moves, like a consolidation period, in order to get some sort of a significant reversal which should take in process after a big sort of a gen distributive or markdown phase. So let's have a look at the volatility right now. So the volatility was in a cooling off period right over this distribution, and we got that, and we got a big volatile move down. So it haven't peaked yet as it did over this area. This was volatility extreme situation of the mark up phase, and we need to get that in the mark down phase too. But there is have some differences, like this overall momentum or volatility in this move was really lower than what it had been over here in this area, because when you check up the angles, it was completely total big red, sorry, big green candles up. And when you look at the candles over this area, we got a downside move and we got a redistributive pattern over here, and it could be also a big accumulative pattern too. It's also a possible case scenario. So it can be a big accumulative patterns, and this could be a spring or a deviation of that range. And it happens in that way too. But I would say I would like to say that it wasn't any sort of deviation. It was a clear redistributed pattern. Okay, this was a redistributed pattern. This distributed again and created a markdown phase again, and we are we got a compressive move in last month. It was total compression, and this is in case this is a totally bullish pattern. When you see this sort of starting shooting star down at the bottom, and once the next month candle breaks that, it's totally a bullish case scenario. And here, when it comes to the weekly chart, weekly it's a double bottom pattern which formed over there, and in the monthly case scenario, we are heading lower volatility again, and or it could be like there is how two probabilities out there. It can be like an extension in the volatility. It never happens, at least right now, because there isn't any sort of a large inflow. There is not how any sort of a big um, consolidation happened yet, in order to create a large amount of volatility in the market. So there should be enough squeezing in the volatility, or a shrink in the volatility, or compression in the volatility to generate that sort of a big expansion in the volatility. Okay. So yeah, what I would like to see at least in this price action is some sort of a significant amount of consolidation here. Once it could create any sort of a pattern like this, or some sort of a again big consolidation here, then that could be eventually lead us to get a big move up. But you know, in fact, we are in a accumulation in a process of accumulation right now. So it's not even a bad decision. Okay, it's not even a bad decision to actually buy the assets like Bitcoin or Ethereum, or potential altcoins at this period of time, because you need to buy, even if you buy the things with FOMO. This is my own thought process, and I would like to share with you that, guys. So there is how the anatomy of the market. So what is the anatomy of the market? That is what you need to understand right now in order to generate a strategy or a plan, um, for yourself to be an active investor or an active market participant in the market. So yeah, as an investor, you shouldn't be that much really active as a trader, but at least you should be really active. So in the market anatomy is really simple. You get a accumulation period, and you get a market phase, and you get a probably another reaccumulation, and maybe one more reaccumulation period, and that's there is a rule of three divergence, or three tap, or three accumulative period, or whatever it is. There is comes three as a major number. So this is the first accumulation, and it could be bigger than these two in terms of volume, and in terms of longevity. Okay, the period of time, it just consolidated over here. So I mean the date. Okay, so it should be both in the date, the time, it's spent over here, and also the volume which got accumulated over here. So it could be bigger than this and this. So that then only then we could be get a confirmation over that this two is uh, accumulation process which the market is creating. So, and yeah, I mean there could be there is not rules for having, it can be like three or even more than that sort of a reaccumulation ledges along the mark phase. When it's not getting enough momentum, it just pauses for a while to generate some more liquidity and fuels to create the next leg up. So that is this reaccumulative processes, and then there could be a big distribution. If the initial distribution isn't that big, this is really big problem. It's kind of like a spring. If it's not, if it's a smaller one, um, then you get often redistributed phases, much more redistributed phases along that way. If it's a large one, then you get a big move, giant move to the downside, and there shouldn't be that much of a big redistributed pattern. So you get only one redistributed pattern before a big move, and that is what you get. So this is the technical anatomy of the price action. So the major thing which you should consider is how big is the initial accumulative process and period of time when compared to the sort of other moves or other market historical price actions. How big this could be? That is the potential question that you should ask yourself. how long it took that consolidation to actually complete and create that sort of a volatility squeeze and cooling off period of time, and how much volume it got in quantity of the Bitcoin, which got accumulated over that ledge. Ledge means the sort of a consolidation that is in another. Okay, it's a synonym for this consolidation period. So that's the question. So if it's smaller, okay, if it's smaller, it's like a small one. It can also create um, a big move up, but in lower volatility, yeah, when the volatility is lower, you get often reaccumulative period ledges all the time. So it's a process of the market. Okay, once it is smaller, the initial, so this is the initial ledge or initial um, accumulative ledge. If it's smaller, then you get much more reaccumulative period of time. Okay, in average maybe. Okay, well, um, so let's got it. This is a reaccumulative ledge, and this is another sort of a reaccumulative ledge over here. So if usually when this thing gets bigger, the initial, and then the number of reaccumulative ledge get, you know, lower, and that is the things that we often find. Okay, so it's like a spring. You know, when a spring is largely compressed, then the expansion that we get, that we do get after that sort of a shrinking, um, it could be a really big um, sort of an expansion that we get. Okay, so guys, the same over here too. You guys can see this is a big sort of an accumulation period that we got here, and what do we get? A big move up. We got another distributed process, um, and yeah, it was another big distribution in some sort of language. And the question is, it can be reaccumulation process here if this thing range back and forth here with more than bigger range than this um, as an asset class get measured creates a big large range as we are seeing in the world right now. That's how we probably do get something like this and another big market phase. Uh, so that's a really probable case scenario that we're having. And um, so in this case, what you guys could do? Okay, so even if you guys are FOMOing in at these reaccumulative ledges instead of that reaccumulative ledges or the accumulative ledges, FOMOing in means making an entry at this point in time. That's a big example of getting into the FOMO because the market got a big pump and but it's still in an accumulative ledge. And if you guys are thinking to actually create an entry point or make a position in spot market, you know, you shouldn't be like going into the leverage side right now because it's completely an investor, you know, focused video that I'm making right now. So the investors there are only the when they're looking to actually buy things or and hold it over the spot market. And even if you're buying the things at this promo phase here, then you shouldn't regret for that because if it's an accumulation, as we see here, this is our weekly chart. We are still in an accumulation period of time. So there should be a markup phase after that. So if this thing is totally in an accumulation list, then there could be a markup phase after of that. So you get the profit. You get a chance to actually create the profit. So usually the people thinking the ability of thinking and capability of thinking inside of the people's mind is actually it's a good thing. It's totally weird because the people thinks in a linear way. Like if they are having $100 in capital, what do they think? Like, yeah, I'm having $100 in capital, so I needed to make, whatever the percentage of the moves the market is giving for them. They think instead of capturing the actual volatility by distributing the risk in a non-linear way, uh, they often do what they often do, and what they are often interested in is buying and going all in because that is easier for them to actually calculate the moves. And suppose they plot over here, then it's 17% of the move that the Bitcoin provided, or 14% of the move is what the Bitcoin actually provided them. But what if they did it with their 10 percentage of their capital? So they would be only getting 1.4 percentage in total. So is that a big gain? Not obviously. So, but they can do something else, like we are not certain about the price because there is still how much more probability for the price to actually come back down and create another ledge. It could be another resistivity pattern if the price is completely making another deviation over here and the price can even come down more in that case scenario, because we don't know what is going to happen in the future because we are not a predictors of the market. Okay, so nobody can predict the market. It's 100% certainty. Okay, so if somebody is marketing, the process of their analysis, like if they are saying like it's 100% certainty that it can go all in, then they are liars. You should understand that. So in case the price is coming back down to this point again, you are still in the accumulation process. You should understand that you can rebuy that with another 10%. Okay, so you got in 20% overall. And in an accumulation process, you get the most like back and forth multiple times, and by that times you can accumulate 50 percentage. You can then you can be like 30 percentage accumulation in total or 40 percentage. Once you get a 40 percentage in total in your hand, and once if you're getting a move of 14 percentage or 30 percentage, then it could be okay, it could be 9 percentage or nearly 10 percentage return, which the market can provide you. So the 10 percentage return is a good amount of return that you makes. Okay, because the average return that the people could make out of this financial market is not that huge as the people market over the social media platforms, because whenever you enter into the Twitter, you see that the people making 10x 100x of gains, but when a bear market comes, it's all get vanished. Okay, they get all their returns going into the hell because of the lack of risk management. So the actual return in a general way, or in a more actual way, but in a realistic way, the people, but the actual return percentage that the people get is 10, maybe 20, maybe 30. Yeah, more probably, or the maximum return is, uh, I would say it's 100% a year is what the best traders in the world makes. If you are going to the stock market leaderboard, you always have the traders like the Peter Brandon and the big, 60-year veteran traders. They make these 100% gains over the stock market, but and what is the Renaissance Technologies, and that's the one of the best hedge fund firms right out there. They actually makes a 50% out of the profit out of the market on an annual basis. So that is these terms are really expectational. counts. So once you manage your risk, you only get lower returns, but it's more safer. But if you want to go all over it, then it's all your decisions. I am not here to say or prevent you from that. But right now, at this moment, what is show them update over the Bitcoin. That is, I know that is what you guys are waiting for, and what you guys are really really interested to actually hear that from out of me. It is it has to go even more up on a daily perspective, I would say, because of many reasons are out there. So you need to think about the last week high. Okay, so this is a supply zone that we are hitting, that we are having. So the price definitely has to make a move above the 21,400 area, because there is the big liquidity is resting. There should be big stop losses of the people they shorter these things, according to this supply zone of the weekly that they are having. So the market is really aggressive right now. It's totally volatile, and there is how bunch of operators coming into the market. And once you get these sort of scenarios, what you should expect is obviously a move up. To take out these shorts, they are actually looking for the price to actually come down when they get this sort of grinding bottoms at the price action, but they are not getting that. Instead of that, they'll be quickly getting out of the market. The market is going to punish them for what they did. It's not a punishment. It's how the market actually moves. Okay, I just the all all the things in a comical way. Okay, so yeah, fine. Um, it is where it's near to head short, and I'm still bullish because the trend is still up. Okay, whenever the trend is really up, never go against the trend. That is what my philosophical aspect, and that's what my philosophical approach for the market. Because the price is above 800 EMA, 200 EMA, and 50 EMA, or the 4 hourly. And if we check that in the daily, it's about the 200 EMA. So the price have successfully broken out of that 200 EMA. That it's something which acted as a resistance for a long time. And once it's flipped that resistance, it could be like going up and get this 28,000 US dollar level. So what I'm expecting right now is, yeah, we need some sort of a consolidation processes, because it has squeezed enough shorts from the market. Okay, there are bunch of shorts squeezed out of the market, and it's a time to actually get a real answer from the market participants, where they do need to get it headed. So once if they could take out this thing, this is where the real market structure break is. So this is where I would like to call it as MSB. It's a real conference that we are gonna change these things into an uptrend again. It could be another deviation also. There is, the deviation comes along with that, but you should be looking at the volatility of the total market conditions in the monthly perspective. There is a bunch of volatility in the market, and you get the MSB market structure break, and it should be a trend continuation process that is out there. And also you should be looking into the trend continuation patterns according to classical chart patterns, which is flag patterns, and there is how falling wedges and raising wedges and all these sort of patterns, which comes under that category of these trend continuation patterns. If you're getting that sort of things at this point of the market structure break, then it could be a trend continuation upside. Then you could be really happy with going, longs, or setting up your longs for as a journey to get a complete rate of profit into the next bull market. But at least in my perspective, right now it's not that much of things which is right now we are cooked in the market. It's if you check that out the daily, the volatility is too extremely exhausted right now at this moment. And if this thing prints something like this, then that could be a possible sort of a pause in the price. Once you get that sort of a pause in the price, it's just consolidate here. If that consolidation makes instead of a distributive pattern like a head and shoulder, then it could be a shorting out opportunity for us, to look for this price or lower prices, and it could be a big another consolidation here. And if this can make another big consolidation like this, then it can generate a big move up. But right now, at this moment, what I'm looking for is
really up, because the trend is really up, and then we shouldn't be looking against the trend. That is what my rule is, at least for the short end. And then that is what I'm expecting, because yeah, at least the longs is what they are coming into entering the market, and the open get pressured a lot. It means that a bunch of shorts got out of the market, and if the shorts are something which comes again into the market, then the all longs would die. And it can happen, because we never have to be a really formal sort of things, because we are in a bear market right now. Still, overall, according to the overall cycle of the Bitcoin, because the bull market often gets turned at the time of halving. So we have in halving until yet, and the next thing is next sufficient thing, or next big thing, is all going to be obviously the accumulation process, and that's back and foremost overall. Okay, so that's all my update. Okay, I'm gonna pause this thing.